Two-way quotation, bid and ask quotes. Now let's see how currencies are quoted in the foreign exchange market by the currency dealers of the participating banks. Forget about currency for a moment. Suppose there is a shopkeeper who sells potatoes. If you go and ask him the price of potatoes, he will always quote you the selling price of potatoes, because you will always buy potatoes from him. You won't go to the shop to sell potatoes to the shopkeeper, isn't it? But the case of currencies is different. When a customer approaches the forex market, he may do so either to buy or to sell the currency. So, when a customer asks for a quote or price of a currency from a dealer, the dealer does not know whether the customer will buy the currency or sell the currency. That's how currency dealing works in the forex market. So whenever a dealer gives a quote, he gives both the selling as well as the buying price of the currency. This is called a two-way quote. In the forex market, the one who gives the quote is called the market maker or price maker, and the one who is asking for the quote is called the market taker or price taker. Can you guess, when the market maker quotes the two prices, which price will be lower? His buying price or selling price? Of course, he will want to buy the currency at a lower price and sell at a higher price. Only then he can make profit, isn't it? So, always remember, for the market maker, the rule is always buy low, sell high. Let's delve a little deeper with an example. So, when a market maker quotes USD INR rate, he will quote as USD INR is equal to 75.2500 to 550. Now, what this actually means is USD INR is equal to 75.2500, 75.2550. Let's understand what are all the information embedded in this quote. First, always what is quoted is the price of the base currency in units of the quoting currency units. Here, the price of the base currency USD is quoted in units of the quoting currency INR. The price on the left is always the buying price or bid price of the base currency, and the price on the right is the selling price or ask price or offer price of the base currency. So, 75.2500 is the buying price of 1 USD and 75.2550 is the selling price of 1 USD. Second, the dealer quoting the price or the market maker will buy the base currency at the lower side and sell it at the higher side of his two-way quote. The difference between the two sides is called the spread, and it is his profit. You can see that the bid price is lower than the ask price, and this spread of 0.0050 is a gain the market maker makes for each USD bought and sold. Third, the price at which the market maker buys the base currency is also the price at which the other party or the market taker sells the base currency. So, when the market maker buys USD at 75.25, the market taker is actually selling it at 75.25. Similarly, when the market maker is selling the USD at 75.255, the market taker is actually buying it at 75.255. So, the market maker's buying price is the market taker's selling price. and vice versa. Fourth, in forex trade, we exchange two currencies so that what is buy in base currency for a party is also sell in the quoting currency for the same party. So when the market maker is buying dollars, he is also selling INR at the same time. Lastly, the market convention is always to make the two-way quote in ascending order. Lower bid buy side first followed by the higher offer or sell side. So this rate is the market maker's rate and the buy and sell is denoted from the market maker's point of view. But indirectly we can derive the market taker's view from the rate too. The market maker will buy USD and sell INR at 75.25. The market taker will buy INR and sell USD at 75.25. Again, the market maker will sell USD and buy INR at 75.255. The market taker will sell INR and buy USD at 75.255. It's usually easier to think in terms of the base currency, but sometimes calculation needs to be done in terms of the quoting currency. In such cases, align your thinking and just reverse in terms of the base currency. The calculations become easier.